Hello, folks. Dan Bird here on Wednesday, January 31st, last day of the month. And this is the midweek update. So I'm going to jump right into it, try to make this brief. So let me share my screen here. And first, let's review the January market performance. This is from Stock Trader's Almanac. You can see the dotted lines are election years. We actually are now over here. So about ready to go into February 1st. And if we look at February, make this a little bigger. All right, so you can see here, election year typically has a sell-off. Usually the last day of January goes up, but that's not what happened today. And then here's February. So we are right here. Tomorrow is the Fed announcement. Will they hike or won't they? We are all waiting with bated breath. Could today have been a preview of what the Fed might do? I don't know. We'll find out tomorrow. But historically, the market kind of goes sideways the first week of February, sideways again, a little bit up in the second week, and then it starts selling off in the third week, which brings us to what I showed last week, which is the presidential cycle. This goes back to 1950, election years. You can see here the middle of March. The peak is the end of February. So we're in the beginning over here of February. Could this be beginning a little earlier than historical? We'll find out, but March is usually a pretty weak period. And then the market moves higher until right around the conventions, and then it sells off again. So for those that have been paying attention, I'll go to my website. If you want my newsletter, I talk all about the presidential cycle this week in the newsletter. So just click right there, go to breakpointtrading.net, click right there. It's for free, and you can download the newsletter. But for those that are on the website, first of all, here's the Santa rally. So today's the last day, and we had a big sell-off today. However, we still ended up positive for January. So we have two negatives and a positive. Normally when that happens, the year ends up 20%. We'll see if that happens this time. But looks like it wanted to come back down. Interestingly, it ended right at the lows, which means, and I'm sure everyone's heard me say this before, the only reason it didn't go lower is because the market closed. So it ended right at the lows. I kind of expect to see more selling tomorrow. If for those that are subscribed, annual subscribers to my website, every day I put in, which industry groups are changing. Only one up day, that's aerospace. Everything else was down, computer hardware in particular. If we look at that, that's Apple right there. So it hit up against that resistance line and then got rejected and starting to move back lower. But if you look at the Magnificent Seven down here, and every night, and I'll put the date when I update it, so 131 was today. Yesterday, all of these ones on the left had blue squares on the left-hand side. They were neutral, but neutral down, meaning they were coming off of a bullish signal, and then they gave a neutral signal. So these were all neutral down signals. And today they're bears. Apple, which yesterday was a bull in the short term, today is a bear in the short term. AMD also gave an early warning signal. So that's the reason for those that are subscribers to just take a look at this after the close every day and just see what these are doing. I think it's pretty clear that there's some rotation out of big cap. If we look at Apple, which now has 3 bears, only 1 bull left on it. We look at Apple up here, you can see significant downtrend. So this blue bar right here is what gives it the neutral signal. And if it comes off of a green, then that's a neutral down. And then when it changes to red, that is a bear in the early warning line. And you can see the 5-day cross the 21-day. So we've got a short-term bear as well. 21-day needs to cross the 50 in order to get a medium-term bear. So if you were watching these, you would have seen very quickly that everything is looking a lot more bearish right now. Back up here at the industries, XLY was a bear in the short term, now just went to a bear in the medium term as well. And if we look at XLY over here, you can see it's starting to roll over right there. So all of that is indicating that the pullback that I had kind of been expecting may be starting to happen. Here's the XLY versus the XLP. You can see it today is just breaking below its uptrend line. So, and it's actually been in a negative divergence. So the S&P has been making new highs while this has been making new lows. That's what happened back in 21. So that's not good. If we look at the McClellan oscillator, this maps the advanced decline lines. And you can see right here, even as the market headed higher, there were more decliners than there were advancers as the market was going higher. That's flipped a little bit, so it went above zero, but it's came right back today. So it might go right back below zero tomorrow if that has one more down day. So all of these negative divergences that I've been talking about for quite a while, I think they are beginning to come to fruition. Here's small cap versus the Qs. So if it's green, then small cap is outperforming the Qs. Right now it's red. All right, so all of these signals are implying that we may be ready for a pullback. If we look at the S&P daily chart, you see the big down day today. There's the reversion to the mean at the 21, which is at 4,800. I expect we will go down there and touch that tomorrow. And then it will all be dependent on what the Fed says at 2 o'clock. If the market likes it, it may go down and hit that and then reverse and head back higher again. If the market does not like it, then it has every reason in the world to just keep selling off. Down to 4,700 probably. There is a support line right down here at 4,600. I don't think we'll go much below that, but it's possible that we get there. So all of these are indicating, if we look at the NASDAQ daily, same thing, NASDAQ sold off today. If we look at the Dow sold off, not as much though. So the Dow hung in there fairly well. And then if we look at the Russell's had a big sell-off as well, went even below its 21. So the next support level for the Russell 2000 is at the 50-day at 191. So we'll see, but it looks to me, and if you'll notice the momentum indicators, this has been rolling over since way back here, beginning of 24. It's about to cross the line down below. So all of these are indicating that the market may be ready to sell off. So be careful. Again, if it's a little early, it looked like March is when the sell-off would happen, but it might actually end up being early, which if it is, then we might hit this March low around the beginning of March, or the low might be lower than that. This is the average over 74 years, by the way, since 1950. So that's the average. So according to this, we should have a little bit more of an uptrend. There is a sell-off right there beginning of February, and then it recovers, goes down, recovers, and then sells off pretty hard into March. So pay attention to that. It's all going to be dependent on the Fed meeting tomorrow at 2 o'clock and what the Fed says. And it will be very interesting to see what happens if the Fed says we are going to raise by a quarter point or 0.15, something smaller than a quarter. I don't think they will, but I'm on record on here as saying there is a possibility of that happening. So we'll find out tomorrow. All right, so that's it. Let me quick look at VectorVest. VectorVest right here. This is the due. Due gave an up signal back here on January 19th. All that needs to happen to go back to a sell signal is for this to go below the 30-day moving average, which it's nearly there. So the 30-day is at 61.998. Let's call it 62. And the price, the close was 62.13. So one more down day and that will be satisfied. And the second piece is the DPO down here has to go below 0. And the DPO right now is at 0.30. So it wouldn't take much for that to go below 0 as well. And then we would have another due down signal. This is the early signal from VectorVest. Their confirmed signals are the most conservative. You can see we're still in a confirmed up right now. And that will remain, will be the case until the BSR goes below 1. And you can see it went from 2.12 to 1.18 in 2 days. So that's possible very quickly. The RT is already below 1. That's why it's getting a red. So it is possible we get a confirmed down signal with one more down day. So we'll see. All right, that's it for tonight. Thanks everyone for watching, and be careful trading, and we'll see what happens after the Fed meeting. Thanks.